I almost forgot to mute ReaperBot. That would have been disastrous. Okay, we're live. Hello, everybody. How's it going?
Good, TD.
Let's go get things kicked off here. If you guys want to help out the YouTube algorithm, just be sure to drop into the stream, leave us a like, and go ahead and give us a share on Twitter and other social media so that we can get a few people in here. Let everyone know what the market's going to be doing for the rest of this week. Which, despite my best efforts, is looking like a great big hell if I know. Based off the latest price action that I'm seeing on the 5-minute, every time I look at the SPY, it looks like it is going to choose a direction on this bear flag and finally break down to the downside, and then it just turns around last second and walks the other way, which, if I'm being honest, is a little bit annoying. I'm going to go ahead and zoom out to the 1 hour and take a look at the SPY and what it's been doing lately. So on the 1 hour chart, going all the way back to this last move to the downside. This definitely looks to me like we are completing a bear flag. Now, this doesn't really change my long-term thesis. I still think that we're going to get a seasonal rally at some point going into November, December. The holiday rally is a pretty strong rally that comes almost every single year. I'm not going to say every year, but at least with the current market conditions that we have, there's a little bit of uncertainty with it. Generally speaking, though, with the second year term of a Democratic president coinciding with midterm elections, we should be seeing the market moving to the upside right as we are leaving October. So very last week of October is when we expect to see the market turn around and start ripping. However, there is also a seasonal drop right at the very last, the last 2 weeks of October, and we have been forming this bear flag that did coincide with a seasonal rally for October. The first 2 weeks of October tend to be pretty bullish, and we've had some nice bull runs, but then we would get some bad news, and then things would start to get really choppy. The VIX blew off top, and now we've had 2 lower lows in the market going back from the 30th of September to the 13th of October. And that marked the start of what I thought was going to be another drop, and instead we ripped back to the upside and started consolidating back up towards the 200 period moving average on the 1 hour. Now we got rejected off of this on Monday. So Monday we had a huge gap up, and then we rejected off the top and started moving back down. My best guess for what we're going to see in this market is we're going to return somewhere below the 50-period moving average on the 1-hour chart. So the reason why I think this is because we have another very similar chart pattern that set up for us back in June, end of May. We have actually a really similar behavior just from that last market sell-off. We had a big drop, and we set up these different resistance points and different market lows each time. So what I'm looking at here is we've got some different resistance points here and a couple of floors here. What remains consistent is this this support right here at around 355 on the SPY. So since we had a big rejection, a gap up and rejection off of this top here, what I'm thinking is that the SPY needs one more chance to retest the bottom of this channel and really establish where the floor of this channel is and confirm that support is there before it's ready to move forward. And I know that that conflicts with this widening of the daily MACD. However, on the hourly, you can see that the MACD is actually quite bearish as we are moving off of the green cloud towards the towards a sell signal. So pretty much all of this is pointing to just big market chop, and it's throwing a lot of traders, even the most experienced traders, off. Me too. The way that I see it is that there's a couple of ways to play this. You can try and day trade the short-term game. You can try to capture these moves to the downside. The problem is that if you're an options trader like me, there's a lot of gaps that happen here. Big gaps that can kind of take you by surprise. The SPY would be moving down towards the end of this channel thinking it's going to exit, and then all of a sudden it gaps up the next morning and you're halfway up the channel that you didn't know was there. And because of that indecisiveness in the SPY and the uncertainty in the bond markets, things are like really confusing and really conflicted. We got a hot mic here. So just a heads up, if you're here on YouTube and you're not part of our Discord, this is actually happening live from the Hell's Trading Floor Discord's voice channel. This is where all the traders coexist and look for different plays and opportunities. So if you guys hear a little bit of background noise or a little bit of hot micing, just be aware that that's all that is. And if you're in the Discord and you've been server muted, just leave a message, a mod will unmute you. So let me catch up with everybody else. What's going on, guys? Mr. J, when did I block you on Twitter? You must have said something that was pretty mean if I had to block you. Thanks for the kind words, Snook. My day's going pretty okay. I can't complain. Try not to, anyway. A request for PRTY, Party City. I'll go ahead and take a look at that one. When BBIG rally? Well, things are looking pretty bullish for BBIG right now as things are. We're just waiting for that merger to get solidified. So once that actually starts coming together for Vinco Ventures, I have no doubt that the stock is going to start blowing off top again, and we'll start to see it work its way out of this channel that it's been trading in. But you notice that we've still been establishing a floor of higher lows consistently, even with the barcoding trying to constantly beat the stock down. It's still been moving up consistently. Let me go get rid of this extra crap here. The other thing that I was looking at on BBIG, and I've been looking at a few other stocks as well, was that volume direction candle chart pattern, or the volume direction candles indicator, was extremely useful at predicting when a big move was about to take place, and it was always at the end of these plateaus where the moving average met the candles, specifically right here, and right here. If you go look at back at each of those moments, it was right before there was a critical bounce occurring every single time. And now we've got one happening right here, and we're starting to get those higher lows. So who knows? We may be only days away from a huge pop in BBIG. We don't know. We're just going to have to wait and see. I keep saying all the time, patience is key. Let's go take a look at Party City for Raz Zamarat. I think I'm saying your name right. Okay, yeah, Party City Holdings. Okay. So we've established a bit of a floor right here along the bottom. Party City's made several attempts to fill this gap and never quite filled it all the way. But it made a really nice attempt to do so during its previous earnings, which were pretty bullish. They gave up a little bit of earnings based on their quarterly estimates, but their or revenue, I should say, there was a little bit of drop in revenue based on expectations, but they did meet their earnings per share. Let's take a look at some of their financials. They got a really small float. I find it really shocking that this company only has a $163 million market cap, given how prevalent they are. Like they have stores across the entire nation. What will happen with Snap? That is anybody's guess, but looking at where Snap currently is in its chart, and based on the way that Netflix earnings reacted, I'm actually expecting for there to be a pretty significant jump in Snap based on where it's trading in its chart. It seems to me like it spent a lot of time giving back a lot of equity over time. And if we look at the volume direction candles, we can see that it's turning quite bullish here. If we do end up getting this crossover where volume comes into the stock as it's pushing up higher and higher, and earnings at this point is a really good time for that to happen. You can see that there's always been big jumps right around earnings or right around a earnings expectations change. Anything like that always resulted in a huge pop of volume, and it's right there, right at the very cusp of crossing over on earnings. And keep in mind, Snap's been selling off for Jesus, like it has been an entire year. This entire year it's spent selling off since last October. So Snap actually started giving up its equity as far back as before the Fed even announced tapering. So there's been a lot given back from Snap, and right now I think that its PE ratio is actually in a pretty good spot. Let me go take a look at Snap. Yeah, they've been decreasing in their income, so their margins are not improving. They've been getting worse. Right now, technicals and analysts are very neutral on the stock. They placed it at a 1-year price target of $13.77. I personally think that their earnings could turn around, but that's just my thoughts based on purely technicals, not having any prior knowledge of where their company financials are sitting at. I haven't been analyzing Snap. This right here is just pure speculation. There's a lot of expectations on Wall Street for Snap to improve its situation. And of course, that can just be a narrative that's being pushed. There's no way to really know for sure. But what the hell, right? We'll go ahead and drop in a trade and see if we can get a position here on Snap. At the very least, there could be a gap fill here. There's two gaps in Snap's chart. One here and one here. It's never filled these. Right now, the MACD is very tightly coiled. The RSI is in bullish territory. We've got bullish moves happening on the RSI, on the daily. On the hourly, it's pretty much just flat, just super, super flat. This is a really tight MACD. Almost nothing, right? And on the hourly chart, you can see that volume's picked up and we've already had a bullish crossover with volume direction candles. And further to that, the RSI is showing multiple bullish divergences as far back as here. And it's now above that previous resistance. It's now trading over that level. So Snap could be a good one. That Netflix trade worked out for us really well yesterday. We had gotten a position for Netflix, and we only traded during market hours so that we also were able to consider our position based on like whether you had bought calls or puts. And calls definitely would have won. Calls would have definitely earned profit. That was an easy 60% profit on calls at the money. Could have gone a little bit further out of the money to get a little bit more exposure, and you certainly would have made a huge win on your play. So I haven't been tracking Biora's Twitter, Clint. But I will take a look at that. Let's see. Maybe they've got a story published here. I would love to cover Biora again. Right now, things are looking at least a little bit better than they were last week. Biora sold off to its lowest point here, down below. It's like 40. Oh, wow. It was like 38 cents. So that was the lowest I've seen Biora yet. But it didn't like to stay down there. It actually jumped up pretty quickly. This sell-off never made sense to me. My best guess for why this happened was just simply that the shareholders, the large angel investment firms, were pounding the stock down in order to acquire more of it. Because as far as I see, the financials of Biora look quite healthy for where they're at. They've dropped expenditure so significantly. I have a feeling what's going to happen with Biora is we'll get one more move to the downside, because this is just that first bounce, right? You get like you get a little bear flag here at the very tail end of its sell-off from the peak in August. And this was when the market conditions were the best suited to Biora. It actually jumped pretty dang high. It went all the way above $1, which I was not expecting for it to do. So what I see most likely happening for Biora is if it's going to turn around here, especially towards the end of the month, is it will find a new level of support right here. The RSI will make a higher low while the price makes a lower low, and that divergence will create a bullish divergence signal, signaling a positive move to the upside where it will resume trading around the 60, 75 cent range that it had been kind of pinned to for a solid 4 months back from June through early August. It did touch that back in May, so that was where it first entered it, and it traded around that area until it got some volatility and then sank immediately after. And again, this is just my speculation, but I think that Biora is an excellent long-term investment, but in the meanwhile, there's some very greedy institutional investors that are trying to do anything that they can in order to get their majority stake in the company, build up that equity in Biora, and hold on to as much of it as they possibly can before they try to negotiate a buyout with a large pharmaceutical partner. That's just my thinking. For right now, Biora seems like it's got a little bit further down to go, and I'm just expecting that that's probably going to be due to prevailing market conditions, and it looks like SPY is breaking down on its bear flag. So with another close below this support, if we get down to less than 367.50 and close down in that range, then we'll see SPY start to drop. And more than likely, anything that's trading on the Russell, Biora included, will drop with it. Hoot Money is missing in action. I didn't realize that. Maybe he's just taking a break. Oh, no more carnage. Thank you very much. That's really nice of you, dude. I do my best with my TA. It's still like I'm still walking around in the desert with 2 sticks, dowsing for oil. TA is an excellent tool, and I do think that it does work at least more than 50% of the time. But it's really nice to hear that it's been helping folks. Any chance that it's time for some more inverse ETFs? I don't think that it's a bad time at any point for inverse ETFs. You can play them both ways. It's just all a matter of your style of trading and what your risk exposure and your risk tolerance is. But for like SPY, when I'm trading the SPY, I'm not actually buying SPY calls or SPY puts. I'm buying UPRO calls or SPXU calls, or I'll do puts on UPRO if I want to go short. Sometimes, if I think that it's going to take a long time, I'll buy puts on UPRO and just let the price bleed away for a while. That's how I trade that stuff. Let's see, what other earnings do we have going on here? Thoughts on Tesla earnings? I mean, Tesla, I think, is probably due for a pop right now. All the bad news that's been hammering it is already out there. So even the slightest bit of good news is, that will be probably enough to encourage buyers to jump in. I've already got a position here in Tesla that you can see on the paper account that I'm using to teach folks some new trading strategies. We've had repeated bullish divergences such as here. So this was exactly when I decided to buy. Was as soon as I saw this divergence hit, I immediately grabbed this position, and you can see that it's like literally at the bottom. So I couldn't get a better entry than this. And I can exit at any point and still be in profit right now as long as Tesla doesn't gap down to 200. That's fine. And I don't really see that happening in the near term. Tesla could drop even further as the crash progresses because I still think there is a big market crash coming. That's where I'm at. But I think that it's going to take until next year for us to get past this rallying period where the SPY is going to start using all of the good news, the good financial data, and any excuse it can, especially like mental denial from traders in Wall Street, trying to fight for every dollar that will cause the SPY to push one last time throughout the late uh, holidays and push the SPY back to previous resistance. And I think that Tesla could be one of the leaders, one of those stocks that make that push happen. My problem with Tesla is that it's just so damn expensive. All right, so I see HYG dipping into close, and that's a pretty bearish sign. SPY is not following it, so that's a divergence for me. And I think that we've been waiting on a bond auction as well, if I recall correctly. I think that I think it was pointed out we've got a what was it? It was the 1 month bonds or something? There's a bond auction happening. I know there is. Well, this 1 month budget statement. Give me 2 seconds, guys. I want to make sure that I'm getting this right. But I am pretty sure that the 1 month bond auction is coming soon. And right before the bond auction begins is when there tends to be a major sell off in bonds that causes yields to skyrocket. And that will also trigger a sell off in the SPY. Let's see, October 20th. There it is. In the afternoon tomorrow, or late morning at at 11:30 tomorrow morning, the 8-week and the 4-week bills, T-bills, will be getting pushed out to the market. All right, I need to go and kill some of these bots. We got bots trying to take over the channel again. Get the hell out of here. Yeah, for me, this would be a time to get into SPX U calls. This is not financial advice, but the bond auction that is happening tomorrow tends to lead with a big sell off in bond markets. That causes the SPY to drop naturally. As bond traders go risk off, the SPY follows that. So the whole market follows bond traders pretty closely. And bond traders tend to know what's up before anyone else does. Also, keep in mind we have initial jobless claims. So if that number prints lower than Fed's expectations, then that's also actually a very bearish signal because it means that the Fed is going to have to do more tightening in order to push prices, in order to push the stock market down and fight inflation. Sorry about that noise. It's a garbage truck rolling by outside. It sounds like a freaking freight train. Just a heads up, this is your last 40 seconds in the market. 40 seconds. Watching HYG and the SPY just so closely. I think that this is going to turn around really quickly. This is just my thinking. Make sure that you hedge yourselves appropriately, and that is the bell. If you're still trading SPY directly or any ETFs on the market, then you still have 15 minutes after the closing bell to open any options position. But that's pretty much going to be it for the trading day. So we'll go ahead and do a little bit of post-market analysis for a little while, cover a few of the other meme tickers, as well as try to get some bearings on where the market's going to be heading for the rest of the week and the month. If you guys have any requests, feel free to drop them in the chat. John Friedman says, I think it'll be very hard for Tesla to hit expectations short time. That is a fair assessment. My only hesitation is that Tesla has fallen from grace very, very quickly. And that massive drop, that anticipation of terrible, terrible earnings combined with the forced Twitter buyout, with the loss of their overseas factory, all of that news was known well in advance. And that, to me, means that the market is already pricing those thoughts in. They know that earnings are going to be extremely bad. Their expectations are already, the market is already expecting Tesla to print worse than its expectations. So if Tesla actually surprises in the slightest bit, I think that that can cause it to rip back in the opposite direction. So that is why I'm kind of inversing sentiment. I know it's going against the grain, but that's what the market tends to do, right? Everyone thinks, it's going to do this. Everyone's so convinced that it's going to do this. But that's exactly the opportunity that institutions use in order to turn things around on traders. They look for that first opportunity where everybody's thinking one way, and then they find the one piece of data, the one thing that no one else is looking at, and they use that as their thesis to rip it to the opposite direction, and then they let fear take over and take hold in the minds of all the other traders that don't understand what's going on. And because all of this bad news was already slamming Tesla over and over and over and over again, like the shorts are in big time. Tesla's got like an almost 3% short interest of its free float, which is a massive amount. That's over 60 million shares sold short on Tesla, which amounts to, let's see, do a little bit of math here. If we got 60 million shares sold short on Tesla, come on, Windows, keep up with me. My computer's not as fast as I am. If we got 60 million shares sold short against Tesla, and right now it's trading for $222, that's $13.32 billion. That billion with a B dollars on the table for Tesla. And most of those shorts have been in this position for a while since Tesla was trading back at around around 236, 233, right before the big earnings announcement. A lot of those short traders got really smashed in their last earnings report that drove the price to the upside, and many of them got squeezed out of their positions. They got back in as Tesla started to get weaker off of its split, and now they've been in the position since around like 250, 260 or so, and they've been holding their positions, generally speaking. So, yeah, if Tesla announces even the littlest bit of good news, this is the way I see it. Tesla says one good thing that the market likes, that's all the excuse it's going to need to turn things around on the market. You've got all this bullish divergence all happening in such close succession with Tesla. It's not wanted to go down, and it just keeps bouncing. And this last bullish divergence you had a very, very close lower low with a dramatically higher low on the RSI. That's a big difference. It looks subtle on the chart, but with the help of these indicators, you can notice some big differences in the way that the stock is behaving. And now for the first time since, let's see. So for the first time since Tesla got its reverse split, yeah, so this is the first time Tesla's RSI has been above the 50. That's the midline on the RSI. The last time that it traded up at this level was after its reverse split, or not a reverse split, just a regular split. Sorry, it's not a reverse split. But right here, it went on a run. 1 week, 11.5%. That's a pretty big move for a stock as heavy as Tesla is. So those are my thoughts. I think Tesla is going to move. I think that the earnings are going to, even if they are bad, are not going to be bad enough that it's going to crush trader sentiment. What time does Tesla's earnings drop? Let's see. I think that Tesla's earnings are going to drop. Let's see. When are they doing this? That's a good question. I don't even know if I'm going to sit in on the call. That's happening in 1 hour and 20 minutes. It happens at 5:30 Eastern. Maybe I'm wrong. It looks like it just took a giant drop after hours, but the data's not out yet. Tesla big doom candle. we'll see how it goes. We'll see how it goes. General Disarray is asking, TQQQ is not inverse, correct? That is right. TQQQ is long on the Qs. It's a 3 times leveraged ETF that goes long on the Qs. See, I hesitate. I hesitate to get all excited about this volatility. Excuse me, all this volatility on Tesla after hours. That doesn't mean all that much to me. Because Tesla was doing stuff like that back at its last earnings call. It had these like really huge down wicks and then giant upswings, and it just kept going back up and down like crazy. Doesn't really mean anything. What matters is what the sentiment is going into the end of after hours and to see continuation. And that continuation, we'll know by morning what the decision is. Unusual Whales already has the data. They probably have a SIP feed. Unusual Whales is big enough that they can afford to get a market SIP feed for market data news, stuff like that. There's services that you can pay for. They're extremely expensive. Hell's Trading Floor, we do have some of them, but we don't have a SIP feed right now. We're still trying to build up enough revenue that we can get that together and provide Hell's Trading Floor with that data. Let's see how it goes. Tesla earnings are out. Thanks, Mr. Head. If you wouldn't mind, if anyone's got a link to the data, we can go ahead and take a look at it. I'd appreciate having that data in front of me so that I could go over it with everyone. Thoughts on the Mullen move today and corporate update? Somebody in Hell's Trading Floor had mentioned to me that they were getting a new factory over in Michigan, which sounds good for them. But for me, I'm kind of staying away from Mullen. I'm not really giving it much. I'm not giving it much thought. For me, Mullen is one that I'm just not willing to touch because of the executive that's in control of the company, the owner. I don't trust him. So if I can't trust, or if I can't understand the motivations behind the actions of an executive board, then I'm not going to put faith and money in that company anymore. So for me, I'm staying away unless there's some really drastic change, or I see some obvious sign that maybe last time I jumped into Mullen was when market makers were just absolutely smashing the holy hell out of the stock. And it was really obvious just based on the numbers. So I was like, screw this. This is fraud happening in broad daylight. I'm going to throw my money in this because I'm going to call their bluff. And it worked out. Their stock went from 56 cents to $4 in a month. So there you go. Yeah, I be really careful about saying it's going to go to X price easy. There's nothing easy about what Mullen has in front of it as a company. I really don't like I don't like when anybody says that that's going to be an easy move. There's nothing easy about what's happening to any company in this market right now. Writer says that Tesla missed. Let's see. Hey, Brian. Covered calls against AMC. I was doing this strategy just to make some rolling income for a few weeks, and then I saw the volatility that was coming into the stock this past week, so I actually stopped. Right now, you can do what you want. My advice to you is that if you're going to sell covered calls in AMC, make sure you're doing it at a price and expiration that's good for you, and that if you had to be forced to sell your share, excuse me, if you had to be forced to sell your shares at that price, that you would be okay with that. But right now, AMC is kind of like bouncing off of a floor and establishing a new high, a new low, and we have bullish divergence on the RSI, which is something that kind of caught my attention on the daily chart. Whenever AMC does this, it tends to it tends to mean things. So we've been bouncing off of this floor for a while. We haven't gotten a bullish divergence like this on AMC. This one wasn't quite bullish divergence. It was just a higher low. But the RSI reacted very similarly. So this kind of like signaled that AMC was going to go sideways, but had the potential for an explosive move upward. And it did end up getting that right after its earnings call. Actually, it kind of started moving leading into the earnings call. So it's hard to say, but I would say like make sure that whatever you're selling your covered calls at, do it at a price that you're okay with letting go of those shares. But you're going to be waiting a while for theta to take the value away from those calls in the market so that you can buy them back to close them. So right now, selling a covered call for every single Friday's expiration, you can only go like to $7. So in order to make any money, so it's really hard. The volatility is gone. So this is not really the time. Ideally, as far as like the math works out with options, this isn't the best time to purchase, or I'm sorry, to sell covered calls, just because the volatility is not in your favor and the price is so low. Selling a covered call is a very slow way to make money. And if the volatility jumps all of a sudden, then you'll have missed out on that opportunity to sell the covered calls at a higher premium. Oh no, game on. I'm sorry, dude. Look, I'm hoping for you and everybody. We'll see what the earnings call actually brings, because this is a knee jerk reaction based on algorithms. This doesn't actually this has a chance to turn around, and this has happened before. So you're in calls, you're in it now. Hold on to the nearest hard surface and just brace yourself. Interesting. So Unusual Whales posted. Thank you, Savvy Trading, for bringing me this this piece of news. Let me go put it on the stream really quick.
They're down 4% after hours.
Yeah, I see that. EPS $1.05. Estimate was $1.01. Sees a 50% average annual growth in deliveries. So Tesla did not beat. That's what the that's what consensus is saying. They underperformed revenue by 300, or I'm sorry, 500 million. Yeah, 510 million. Their revenue came in at 21.45 billion. The estimate was for 21.96 billion. So they underperformed on revenue. They had a slight beat on earnings per share, unless that's supposed to be a negative number. But I'm pretty sure that Tesla has been has been performing on earnings per share. It's been delivering on that. So if the estimate is for, okay, yeah, there's a positive estimate. So that's not supposed to be a negative number. So they missed on revenue and beat on earnings. That's how I understand it. But it did not beat expectations. So the initial numbers brings an immediate sell-off. We'll see what the actual earnings call brings to us, and see if there's any turnaround in sentiment. Okay, time to go and block another bot. Go away. I do analyze for Vyckoff accumulations. Like I do look for that stuff. And you could totally be right, VK. Like I'm not saying that Vyckoff accumulation can't be happening with Mullen. My beef with Mullen, it's not even a beef with the company itself. My beef is with the executive that is in control of the company and his continued opportunity taking to dilute the stock at the expense of retail shareholders, and he's doing it strategically in a way that is the most harmful to his shareholders. So that's what I have the problem with. And I don't care what the company's trading at. I don't care if it jumps to $1 like you say. I disagree with the sentiment that it's easy. I think that this company has a long way to go, and the attitude of the executives is to ignore their retail shareholders, and they keep diluting personally held shares, not the treasury held shares in order to bring the company wealth. No, he's selling those shares to make himself wealthy. So I don't think he has good intentions, and I honestly don't think he gives two shits whether the company succeeds or not. So if you want to get into this argument with me, that's going to be my premise, is that Mullen's executive is selfish and greedy, and he does not give a shit about you. He doesn't give a shit about a single investor in that company. If he was going to sit on the side of retail investors and bring the company up to make it profitable, then he would be putting up his own damn cash to make it happen. He's not. He's taking money from the company at every opportunity whenever it exits one of those lockout cycles. That's what he keeps doing. So I judge by his actions and the way that he is running the company. He is putting out a bunch of news without corroboration or any evidence to support what he is saying, and it keeps diluting and it keeps dropping down, and it's happening at critical moments that is the most harmful to retail investors when they are the most hyped up. So if you want to have that argument with me, that's fine. We'll have that argument all day long, sir. But I am telling you that Mullen's CEO is here to take money from you. He is not interested in making you all rich. Okay? And don't ever tell somebody that a price target is easy. That's irresponsible. Don't tell somebody that it's easy to do this. This comes with hard work. And you have to have a really good nose for bullshit. I got bamboozled several times. My nose has gotten a lot stronger. I have a stronger sense of smell for bullshit. Mickery is full of it. There is other ways to make money in this market. You do not have to play penny stocks. You don't have to do that. There's no reason to take those unnecessary risks on these companies that are a massive gamble and a huge maybe. That's a lot of empty promises that come out of Mickery's mouth. Where are those van deliveries that he promised a whole damn year ago? Where's that weed company that was going to start buying up all those vans? Did that sale ever even happen? Guarantee if you go look at their books and you have a third party audit this company, that sale never happened. And that would be the easiest thing to prove. If that was actually a thing, that they had those vans and they were being delivered, it would already be out there. That news would already be there. So Like that's all you have to say. That's all you have to look at. You don't need any more evidence than that. If the company has actually got some vans to sell and they have a customer that's claiming that they're going to buy them, show me the receipt. Show me the invoice. Super easy. All right, I'm going to calm down. We are going to calm down. What is happening in the Discord chat right now?
Nothing. Go back to YouTube.
How guys use Tinder.
Go back to YouTube. It's all safe here.
Mm-hmm. I totally believe you. Oh my
I asked her how she got my gift.
Y'all are funny. All right, let's see. When is NVIDIA doing their earnings? I don't even see their earnings for Q3 on their calendar. Here we go. Happening the 16th of November. All right, we'll go ahead and pass up on that one. Just a reminder for everybody that's here in the Discord that if you have speakers and you do not turn off your microphone, it will come through. So please avoid hot miking. Otherwise, I'll have to server mute you. And I'll be happy enough to take you off server mute once asked, but we want to make sure that we're protecting everybody's privacy. And also, I don't want to have to talk over myself. Another bot? Man, they're really persistent, aren't they? Get out of here. All right. So, have I seen the crazy horizontal triangle on the BBIG daily chart? I believe that I did draw something on that. What I was looking for specifically on BBIG was a diamond bottom. So that was where I started. Actually, there is a diamond bottom right here. I'm gonna have to take away my moving averages so that this isn't such a jumbled mess. But if you draw along the tops here, bottoms here, a floor here, and a floor here, this is actually quite a characteristic diamond bottom. And I had a feeling that this was going to create that diamond bottom. Because what you end up with is a very head and shoulders like pattern that appears at the bottom of the market. But the diamond bottom pattern always has this characteristic spike up, spike down, kind of like looking at a P wave on a heart monitor, or the QRS. There's going to be a nurse in this chat who's like screaming internally, like, "Oh, you're so stupid! That's not a P wave." I can feel it. Like I can feel somebody in the medical industry just like dying internally. But anyway, like this is what I'm talking about. The up down, huge up, huge down, and then it ends up forming out like a head and shoulders at the bottom of the chart, but it never breaks the neckline, and you end up with a floor at the bottom of it with just one spike down and then consistent touches along the floor. That is the diamond bottom, and we actually had another one that happened on a shorter time frame here on the 1 hour chart, and this is what I had drawn before. So this also qualified a diamond bottom. You got that head and shoulders like pattern, and it just kind of escapes off to the side. Now we're getting some volatility and some good news, bullish catalysts, all sorts of good stuff happening for BBIG. So things like that I can see easily is setting us up for a nice push to the upside. But to your point, you can also draw a symmetrical triangle on this chart pattern as well. That also matches up right here You can see that here in the cyan colors. So that would normally qualify as a bear flag in some people's mind, but the difference between a bear flag versus that symmetrical triangle is you have here's a bear flag I'll draw for you. Is you have this big move to the downside, right? This is what we call the impulse move, and then you have the stock create this zigzag pattern going to the upside, and then what you end up with is this little flag, right? And then on the third touch of the bottom, there's a breakdown, and it's supposed to move the entire length of that flagpole. So it would move all the way back down to the next level, about equal to the pole. And that is a bear flag. What we have instead is we have the chart doing this, and then we had a floor established. We broke down a little bit and then shot way up and then shot way down and then created this bottom. And now we're starting to get a little bit higher. And instead of a bear flag, you get this diamond pattern. So that's the difference between a bear flag and a diamond bottom. They're very difficult to see, and you usually don't see the diamond until it's like already almost completely drawn out. It's like a very last minute pattern. But looking for that big spike, this huge move to the upside, this down, up, down, like really quick impulse, that lets you know there's potential for one to form. So that's what I'm watching a lot closer than for any type of bear flag or pennant or anything like that. Is tomorrow a big day for GameStop? To be honest with you, no. I'm not going to say no. I'm not sure. GameStop, I'm not tracking all that much anymore. GameStop hasn't been doing a whole lot. To its defense, neither has BBIG. Nothing's really been happening with that one either. But it's just been kind of range bound, right? Kind of in this really awkward range around its floor. But the one thing that I can tell you for GameStop is that it's got these consistent higher lows. Like every single week, it's putting in a higher low. So even despite all this volatility that it's dealing with and the whipsawing that traders are feeling, like if it's your buy and hold stock, like it's been for most of the retail community, there's really no major change. I didn't notice this until just now, but the volume direction candles on GameStop are this is very bullish. This is actually a giant plateau formation on GameStop. Let me go out to the daily and see what this looks like. Yeah, this is interesting. So notice that GameStop has been like all over the damn place since the beginning. Like we had the huge squeeze to 400 and then all the way back down, and it's just oh my god, like it's going all over the place, right? And everybody's been getting just annihilated on the downstrokes because, people buy when things are going up and going really well, but then, they hang on and hope for things to improve as things are in decline, and they end up getting trapped in positions with no real way out. And that's kind of been the story of GameStop for the last year now. But the volume direction candles indicator, that's what this whole pane down here on my trading view chart is. This is kind of like an OBV, a on balance volume indicator. And what I've noticed is that a lot of the meme stocks that are big squeeze plays is they have this they have this formation of plateauing that occurs on their charts. Let's zoom way in on GameStop and bring us all the way down to here. So right off to my right is like the January squeeze, right when it was about to happen, right? So the whole time the stock is going sideways and not really doing much. Well, this is what the volume direction candles was doing that entire time. It was making these moves to the upside and then kind of going sideways. And once it was about to touch this moving average, that's this little thin yellow line. This is a fast moving average of its volume direction candles. And this isn't based on price, right? Volume direction candles are based on the price direction and the momentum based on the amount of volume. So when there's positive volume and positive price direction, then the candles go up very fast. And just the opposite, when there's very little volume, there's very little movement. When there's a lot of volume and strong price action to the downside, then there is then you see the big red candles and the volume direction candles start moving down. So with this one, you have volume direction candles starting to move towards its moving average, and then it would suddenly get some strength. And then it would go and plateau again, like move down very, very, very slowly as the price declined. And eventually it hit this point where it had a huge pop of volume and things got out of control and shorts started to get squeezed. And that's when that's where the shorts totally lost control. They had no control over the stock anymore. And let's see, when it popped up to $93 and then came back all the way down to $13, you look at the volume direction candles there, same exact formation, right? You had that huge move to the upside, the volume came in, and then volume direction candles are going just sideways as the price is in decline. It's because the volume's gone. There's nobody trading this. And then the price starts going up again and the volume starts surging again. And this pattern repeats over and over and over again, not just with GameStop, but with tons of other meme stocks that had these huge moves. So it seems to me that every time that we return back to this moving average, once the price is consolidated for some time, that's when there's the opportunity for a big surge, that huge jump. So we're actually kind of getting that with a lot of our plays, really. We're getting that happening with GameStop. The price had a big pop here and then slowly calmed down. Another big pop here right before earnings, and it's just kind of consolidated. But things are getting more volatile on the volume direction chart. And that's precisely what started happening right before GameStop had its big squeeze. So things got really volatile really quickly right at the last minute. Right before things got totally out of control for the shorts, it started jumping and plateauing and then jump and plateau and jump and plateau over and over and over again. So this is something to kind of add to your tool belt. I'm looking at volume direction candles in all sorts of different ways. It's a really interesting indicator. And I find it to be really useful at looking for patterns and trends based on volume, which is something that I notice not a lot of traders are doing. They'll look at things like, oh, if volume's going up and the price is going up, that's good. And if price is going up while it's going down, maybe it's going to reverse to the downside. But volume direction candles just kind of tell a different story. So it's a helpful tool. How did I learn all this stuff? Honestly, I spent just a lot of time watching different YouTube videos. I looked at different, I spent a lot of time reading internet articles and different blog posts on trading. I learned all the chart patterns that I could. I spent a lot of time just learning, flying from the seat of my pants, to be honest with you. A lot of this was just time spent playing in the market. And I played with money that I shouldn't have. That's something that I should probably let everybody know, is when I started this journey, I lost a lot of money. Like, I lost a stupid amount of money. I got really lucky with AMC, and I at one point had $500,000 that I could have reasonably taken. I could have sold a bunch of calls and stock when AMC squeezed to $70, and I didn't take that opportunity, and I lost all of that. I took some profits, but it wasn't as much as I should have. I got really greedy, and I got a very hard lesson in in taking the money that's in front of you. So I had to learn a lot of hard lessons, and I had to lose a lot of money. Um, and I paid for it in more ways than I would care to admit. But the best way to learn is probably from other people's mistakes, so that you don't repeat them. If you're interested in learning some of this stuff, I strongly encourage you to consider joining Hell's Trading Floor. Our membership is really cheap. You can join for $5 a month at hellstradingfloor.com, and you can be a part of the group. We're really, really happy to have people jump in and ask questions. We've got a fantastic trading community, and we've got people from various levels of experience, all walks of life, learning how to trade together. And what I've noticed is that when there's a community of people working together, all moving in different directions and trying to spot plays in the market, we are much stronger for it, because we can, with 1,000 pairs of eyes, you can see way more opportunities than you can by yourself, even with a decade of experience. One says that I said this too late. Why is it too late, homie? Glad to have you with us, Brian. You are the pickle jar. I'm keeping it. I'm looking out for the pickle jar now. Okay. I'm probably going to have to close shop here for the day pretty soon, but if you guys want to throw... Oh, one. I'm sorry, dude. Oh, man. 95%. It hurts. Listen. I wasn't 95% down, but I've been really close. I've been really close to that. So you can always come back from those lows. There's always a way to come back from that place. What I find is that it's helpful to start over with something that you're not risking. Yeah, small cap plays is how I did it too. So I feel you there. Look, if you this is not a I'm not trying to sell you anything, and I don't want to encourage you to jump into something that you don't care to try anymore. But if you are interested in trying to trade for real, learn how to trade, and try and be a part of a group of people and a welcoming community that will try to help bring you up from that rock bottom, then we would be more than happy to have you to try and help you do that. We have a trial. There's a 7-day trial with Hell's Trading Floor. You can jump in and give it a shot, and if you like it, stay. If you don't, then no hard feelings. But we encourage everybody to start out with paper trading. You can start with a free version of TradingView. TradingView will let you open up a paper trading account, and you probably even have a broker. Your broker probably has a paper trading system as well, especially if you're with TD Ameritrade and you have Thinkorswim. That one has an absolutely fantastic paper trading setup. Interactive Brokers. I think Fidelity has one too. So if you are interested in trying to learn from the ground up, we would be really happy to have you and try to help you, because I've seen people that have been in the exact same place, and although I would argue that I'm not a fantastic trader, I say that I make just as many mistakes as everybody else, but the strength of numbers and the strength of having other people checking you and looking for other opportunities with you gives you all the advantages of working on a legitimate Wall Street trading floor. Absolutely, man. This is a game of building experience. And thankfully, there are ways to build experience in trading without risking real money. So if you want to give it a try, and that's something that you're interested in, if you have this attitude like, I don't want to give up on this, it shouldn't be I'm going to win my money back. I'm going to take my money back from the market. That's revenge trading, and I don't encourage you to do that. What instead I encourage you to do is like, I have to start over, and I have to start it over right. And if that's something that you're interested in doing, this is a good place to start. Okay. I think that is a good place to end it. I've got some work that I have to wrap up for before the end of the day, so I'm going to go ahead and close it down here. But just keep a close eye out for the rest of this week. The market is looking pretty weak. The SPY has been kind of juking everybody out a lot, and right now we're still trading in this bear flag that's got me just a touch nervous. We gotta be really careful of a rug pull where we could see some downside to the 200 moving average on the 15-minute or 1 hour chart. They're pretty close together. Around 361 is where I'm estimating that we may retest lows before we continue on a new rip to the upside. Seasonally speaking, end of October is pretty bearish. So there is a possibility we see the market just kind of taper off to the side and down and to the right for the rest of the month. It all depends on economic circumstances and what the market is going to decide to do based on the Fed's reactions, based on employment numbers, and based on new market data as it comes out, and especially the bonds. I want to remind everybody, keep a close eye out on HYG. That's the high yield. That's the high yield corporate bonds. These are junk bonds index. This is an ETF that it basically is a barometer for what the SPY is going to do in the future. And if you see some divergence between HYG and SPY, HYG tends to know what SPY is going to do before the SPY knows. So this is how I use HYG, and generally I would say that it's been right 9 times out of 10. Also keep in mind that we've got initial jobless claims, Philadelphia Federal Manufacturing Index, and existing home sales coming out tomorrow, as well as the government monthly budget statement, and several Fed speakers will be coming out in the afternoon to speak. So there's going to be a busy market day tomorrow. Lots of news, lots of opportunities for things to go in either direction. You can pretty much bet that if the jobless claims come out lower than the Fed expects, then the Fed is going to come out really aggressive, and the market's not going to like it. And this also coincides with a big auction happening in the T-bills market. So the 4 and the 8 week T-bills market is going to see some serious selling pressure. You'll see the 1 month and 2 month bond yields skyrocketing. These treasuries, these T-bills, act as collateral for the market, and when these yields start skyrocketing, it means that they are being sold off at market, and it's killing the price of these bonds. That's going to hurt the collateral of several different banks, institutions, and trading firms. They're going to be looking to shuffle money around, and that tends to cause some serious declines in the broader market. And also, of course, we have a lot of earnings coming out, especially with different home builders, finance institutions, banks, and so on. So keep a close eye out on that, and I will try my best to be available to help teach everybody anything that I can, and keep an eye out for other catalysts in the market, and give us the best chance to navigate this chop until we get to the other side of it and work our way back to the next high of the market and get through to this next bullish bear rally. Thank you guys so much for stopping by. I look forward to seeing you guys next time. Until then, have a hell of a time in the markets.